And when the SEC announced that they were holding off on ETF applications until October, it just seems to me like Bitcoin's waiting for news. What do you think?
No, I think you're highly correct on that, is that most investors in Bitcoin are hanging their hat on the approval of a spot ETF. We've heard even of filings for a spot Ethereum ETF by ARK, and I think there was one other player. But there's no doubt that investors are. My bigger concern, and by the way, right now, if you're a bull on Bitcoin, you're hanging in there, and I'm going to tell you why. Because we came down, and it was nasty that we did come down here, but we never took out the low from June, mid-June. And so what you have is you have a low, a higher low, higher low, higher low. And right here, we never took out that low, so technically you still have a higher low. As long as that holds, you could make a case that, okay, this was a pullback waiting for the spot ETF news. Maybe it can retest that 31 to 32,000 level. If, on the other hand, we break this level, which is around 24,700 and change, and you make a lower low, technically that breaks the uptrend of higher lows, and you have to get very, very nervous. Now, I think that the spot ETF news is going to be a net positive for Bitcoin. My biggest fear for Bitcoin is that the NASDAQ, if the economy slows down like I think it is, the NASDAQ has potential for 20 to 30, maybe 40% downside. And how does Bitcoin hold up in spite of that, right? So if you told me the NASDAQ was going to drop 30%, where is Bitcoin? I would dare say it's a lot lower than it is now because people will be running for cover in all risk assets. And like you mentioned, it's still generally a risk asset. So for me, at least, I'm very cautious here. Doesn't mean I'm not slightly long here and there for swing trades, but I want to see what happens if the NASDAQ starts to fall. We know the Magnificent Seven have started. And I just want to show you this chart. This is a big deal here to me, and I apologize for going into this stuff, but if we go to our weekly chart of the NASDAQ, look at what's happened here. So I basically drew arrows showing the .com era and what the formation was, and look at what we have here. So this was a lot smaller because you didn't have as much quantitative easing in the mix and the COVID money, but you had this big move up, then a pullback, then an epic bounce, and then the big .com collapse. Well, if you look over here in the recent history of this market, it's the exact same formation. And that is very alarming to me because of what happened with the .com collapse and how it kind of played out. So again, these are pattern formations. It doesn't mean it's going to absolutely repeat. But when you look at this stuff, you have to say, this could be something that could play out. There's a probability in there, and it has to be taken seriously by investors.
I've seen these double tops in a lot of things. Usually when you see a double top like that, does that usually mean a correction?
It usually does. I mean, again, you have two types of tops. This one was a lower top with a rollover after a big bounce. It convinces all the people to go bullish again. Or then you have the other scenario, which is the M top, which is the double top with a slightly higher high, which was the Bitcoin 2021 top. And then we know what happened there. So either way, it's not a good scenario, whether we go to double top and hit that high, which means we go back and make a new all-time high, or if we roll over here, they're both a negative scenario for the overall stock market.
That's an excellent point. Can you just maybe pull up the Bitcoin chart to illustrate exactly what you just said? Because that was what you just said was very important.
Yep.
A lot of people in 2021 didn't see this, and I was actually a friend of mine who brought it up to me. I think you brought it up to me as well, but you see exactly that. Went up, down, and then in the second top, exactly what happened in 2017.
Yep, exactly. That's exactly what it is. And just so everyone's aware, the psychology behind this is really important because you had the high at 65,000 and we actually broke above that high in the second top. The reason that happens is because the markets have this tendency to want to flush out stops. So think about it. If you're short, you're probably putting your stop right at that high because if it breaks out, everyone was saying it was going to go to 100,000. It broke out, stopped all of the bears out, and then anyone who was on the sidelines and like pseudo bullish, once they broke that top, it gets everyone to jump long. And so it kind of gets everyone max offsides on the trade, which then enables that bigger rollover to happen. It's amazing if you get into the mindset of trading and investing.
So evaluate this strategy. So given that a lot of risk assets have shown this pattern, wouldn't you wait for something to move up to near its past high and then get in because you know that's when FOMO starts to kick in? Just write it out for maybe 5-10% and then sell, knowing that perhaps it's not going to go much higher. Is that
So you
that,
can.
Yeah.
That's definitely an option. To me, that's a very high risk option because your downside, if it doesn't happen, is so massive, like we saw in Bitcoin, like we saw in the .com era. But again, it's just a matter of your risk tolerance. For me, I'm always someone who likes to buy low. I don't want to chase and buy near the highs, just hoping for that next little blip. To me, that's like a meme coin or meme stock play where you're hoping to sell it to someone else real quick. I'm never that fast, so I like to get things at the lows.
Can we talk about, well, first of all, before we get to another asset class, I mean, let's talk about your strategy for just a minute. I think one of the things people like about you, Gareth, is that you mix the fundamentals with the technicals. So you take a chart and then you explain perhaps why things have happened the way that it does. But more generally, Gareth, do you believe that a chart fully reflects the news all the time?
No, it doesn't, right? Fear and panic are the #1 factors in the market, right? So emotion controls all of us, you, me, everyone else. When people get fearful, they're going to dump in panic. When people get greedy, they're going to buy and just FOMO in, essentially. And so you do have this disconnect between fundamentals. And we saw that in the .com era. We saw that in the crypto markets in 2021 and even the stock market. The key is this, and this is what's important about Bitcoin, is that what you're seeing, the grayscale news, the Ripple news, all these filings for spot ETFs, those are all really good fundamental stories that Bitcoin, that are good for Bitcoin. The key is this: fundamentals play out over a long period. It's like building a base. It's like planting a seed. That tree will grow. It's going to take time. Technicals are much more short-term based on emotion, and so short-term technicals rule, long-term it eventually reverts back to that fundamentals.
Mm-hmm. This is maybe for somebody who is a rookie, they might think like this. I certainly thought like this when I first started reading the markets. Look, the markets are composed of investors and traders, very smart people. And if something's going up or down, whatever direction that particular asset is taking, it's probably because the winning side is right at the moment. And so why fight the smart people who are right in the moment? Why not just ride whatever trend is in place right now? Is there anything wrong with that logic, Gareth?
So it depends on where it is in the cycle, right? I mean, there's nothing wrong with going with the trend. The tricky thing is, at what point are you getting in? Are you getting in at Bitcoin at 67,000 before it tops out, and then you're looking for 100K, and then you're sitting holding the bag down to 30,000 or 15.5? And I think that's the tricky thing, is like, for me, I'm much more of a support. I want to buy at support and sell into resistance, and I try to gauge human emotion, and I go opposite this, right? So when you see that euphoria, it's a warning sign. I have these red flashing lights in my head that go off. And same thing, when there's blood in the streets, as many famous investors have said, when everyone else is freaking out, you have to be the logical person and say, well, what are the fundamentals here? Does this make sense? And that's usually when you want to buy.
Okay. Well, you mentioned gold. Gold has had a pretty rough second half of the year. Can we take a look at the gold chart, please?